Hi, everyone. Alexander, Paul, Ren, Sinatra. Let's have a great week. I agree with you, Alexander. Great sentiment. Good morning to you, Paul. Everyone doing okay? Have a good weekend. Gorkum, how are you? Stephen, Hugo, Marco, all my trading warrior brothers and sisters. Wishing everyone have a great week. So let's take a look around. Last week, the world changed, right? So okay, COVID-19 in Israel. Uh, Not sure what that is, but the dollar, the dollar is not done. The dollar, I don't think will close back under 91.40 before we get to 95, 96. So bullish. Okay, I'm not sure what 19 is. Is that the? You're not seeing my graphics. Okay, okay. So there's a dollar. I think you have to scale in between here and 91.40. I don't think the euro has bottomed. I think you'll get better rallies from about 1760 down here. You have to look at it daily, down around here. And 120 is going to be a big barrier. So, if you're short, you don't want to see it closing back over 120. I think eventually we're headed towards the 114 handle. And I'm thinking about what the Fed did last week, and I think they're really kind of boxed into a corner. And if we finally do get a correction in S&Ps, and here's my important pivot line that it's doing battle with right now. If you look left, I don't know if you could see it, look all the way left. You'll see how important that area is, that blue line. Okay, so in order for the S&Ps to stabilize, you need some candles to start closing, preferably a daily candle back over this level. But I was thinking about the Fed, and they can't just reverse course after the presser and what they did at the last meeting. So even if we could squeak out new highs, and I think there is a possibility we get new highs in NASDAQ, even though we came off. We could still move higher, maybe get a failing rally in S&Ps. Not sure 4,300 is on the table anymore, but I think it's going to be hanging over the market now. You know how we had a Fed put for a long time, and I never understood why a Fed put meant that the market can't go down. So then I think we have a Fed call now, and that the markets are going to be have a cloud hanging over them on rallies, and that it doesn't end until the Fed actually does something besides jawbone. Kind of like what you see in the stock market when a stock is going up, and then you have earnings and it peaks. So I don't think the market bottoms. I think we could have a rough summer and a strong dollar until the Fed actually does something. Okay, announces the amount of a taper and start tapering. Buy the rumor, sell the fact. So I think that's a major thing happening here. We're Today's the first day of summer, right? So the market had a great spring. Everything went up together, right? Gold and the market and everything came down together, didn't it? All spinning around the dollar. Okay, so as long as the dollar is good, it's going to be hard to find things to be long. There still are a few holdouts. I'd consider oil a holdout, although it's looking pretty heavy here. I'll sell new highs up here. Okay, I'm not sure what you're saying. 120, okay, in the euro. Okay, so also the VIX. Remember me talking about these ghost trades down here. So we're over this pivot here as well. So S&P's under the pivot, VIX above it. To arrest selling pressure, you need the VIX to close back under 19. Looking at gold, I think there will be a nice counter trend. Everyone else see my screen? Monica, you may want to log out, log back in.
Yeah, we can see your screen, Dale.
Thank you, bro. All right, so I do think there's a rally up to 1800, 1840 coming, and it could be as soon as this week. See this little formation in gold? So I'm looking for one more low to try a counter trend trade in gold. And the reason it's gold over silver is because the XAU, the gold silver ratio, is threatening another breakout at 68.5. So that's going to make gold your preferred long and silver your preferred short. So we'll see what happens there. So a lot to pay attention to. It's very amazing that the 10-year is back underneath where the Fed said it would be. Maybe we're going to turn again right here, but we need to close back under 148 bips. So a few things that I'm looking at. Scaling into the dollar, I don't think we have a good high in the dollar until we trade maybe around 92.5 or so, and maybe even 93.5. So we'll see what happens. But for right now, I don't think the first wave up in the dollar has peaked. One more push is what I'm looking for. Okay, thank you, Sansi. Hello, Blake Morrow. How are you, buddy?
Hey, Dale. How's it going?
Pretty good, man. Looking forward to trading a new regime.
I'm sorry?
I'm looking forward to trading a new regime that Paul gave us. I think that they're in a corner now. They're going to have to do something. I don't think he could back up now and say, no, we're not going to do what I said we're going to do at the last meeting. I think they have to follow through with something in the next couple meetings, and it's going to be kind of a cloud hanging over asset prices.
Well, I do agree that the Fed has paved the way for tapering, moving into the end of this year, and I think the dot plots from this last meeting, from this last week, excuse me, at the meeting, reflect that the Fed is growing a little hawkish, more hawkish. We're seeing some of the members that are shifting their expectations, and which has shifted our expectations, in the market. So, the dollar is, I think you said it, that 4,300 level in the S&P is, going to be overhanging now in the market. And I think that we're at a risk of, seriously breaking down and, towards like, maybe like a 4,000 level. I think a lot of it is seasonality now. And,
okay.
Let's
see your charts, bro.
Yeah. So here, let me go ahead and pull over my S&P chart.
Also, Blake, we have a new guest. I'm always hunting, although, people that I think really add value, I keep them in the rotation, but always looking for new people to bring in. And today we have Carly Garner, who has appeared with Jim Cramer on his show and is an author about commodity options. And what a great time to be talking about what's happening in commodities with what happened last week. So I'm expecting a great interview with Carly today.
Oh, that's great. No, that's pretty exciting then.
Yeah.
Yeah, you gotta love the new when you bring in a new guest. That's
always
awesome.
Looking, bro.
Yeah. No, it's awesome. I'm glad to have it's Carly
Garner.
Oh, Carly Garner. Very cool.
It's at the Carly. Her handle is at the Carly.
Oh, nice.
Okay, Carly's going to be here, Stephen, at the bottom of the hour.
Very, very cool. Well, you know, he asked to see my chart. So here's the S&P. Here's the 4 hour.
So we had the breakdown.
We
Okay.
did, as we noted in the week ahead video. So here we have bounced back towards the 38% retracement. Personally, I still think we can go a little bit higher on this bounce. I mean, you know, right now futures are up. You know, Dow futures are up what, 200 points right now. S&P futures are up 17. We're seeing a nice little bounce. I actually think that we might even extend that bounce maybe to the 50% retracement somewhere around here, like some of this previous support. You know, so we might make it back to 4,200, this infamous 4,200. But I think the more glaring, you know, I think characteristic of what we've seen is us obviously move out of the wedge formation, but I think that we are making lower lows here. And what I'm going to be looking for is a lower high. So if we can, you know, stall, like let's say around here, you know, this would suggest that we are, you know, in a correction. And that's what I'm thinking right now. So, you know, I'm looking for maybe the bounce to further extend. The problem with that is that we've already hit the 38% retracement. This is previous support. There's your 38% retracement. So we're at the underside of this broken trend line. I mean, we might just stall here. I mean, this could, like today's bounce, what we've seen right now could be it. That is obviously a risk right now, but we're seeing, you know, some of the dollar pairs pull back a little bit. And I expect that. I do expect the dollar to pull back a little bit. You know, this is the chart that I found most important for the dollar. You know, we have this wedge. We're near that 78% retracement. You can see we have alarm set up there, you know, as we approach the 92.50. I still think that we will try to extend our gains. So we might do something like that, you know, pull back a little bit, make another surge towards the highs, hit wedge resistance, relative strength will probably be divergent, and then reverse up there. So if you're looking for, you know, short dollars, it might be better to wait just a little bit longer till we can extend towards those highs, towards that resistance. And then, you know, I still think we're consolidating here. So that's kind of what I'm thinking with like the dollar and with the S&P. Now you had mentioned, Dale, precious metals.
Yeah.
So I'm actually going to talk to, I did this interview with Bill Brock. If you guys missed that, it's on Trader Summit right here. Let me see if I can pull up the interview for you. Right here on the 18th. He's Blue Line Futures president and CEO, and you guys should watch he puts out daily content here on Trader Summit, just kind of updating people about the markets. We're gonna have a conversation later on this week about the relationship, where he's seeing like open interest in the markets, with gold versus Bitcoin. Remember that conversation about how gold
inverse?
It's a little inverse. Yeah. He's got some evidence to suggest
that it isn't.
Well, I'm not going to give it away.
Oh,
you guys got
you've really gotten the hang of TV, man.
No, you guys
nice tease.
The thing is I'm not going to take away from his interview.
Right. Yeah,
and
sure.
He's got some things he'd like to say.
You're a broadcast journalist.
Yeah, well, you know, hey, the fact is he's gonna bring the content and the actual statistics. So, and some of the, like I said, open interest on what he's seeing in the market. So, the reason why I point that out is Bitcoin is nearing major support here. So, I've been looking at this chart as a flag pattern. I think everybody knows that as long as we're below the 200-day moving average, this 38% retracement that held a week and a half ago at the 4130 level, the risk is lower. So now we are nearing key support. Now, what else I should probably do at this point, if you go to the 4-hour chart, let's grab this lower end of the wedge, right? So let's actually see the low right there. That was the low that was on May 19th. Let's bring that trend line up to connect the spike low from the 8th of June, then the spike low from overnight. So now this should really show you if we break the overnight low in Bitcoin, which by the way just happened, I want to say an hour ago. So if we break that overnight low from an hour ago in Bitcoin, we may challenge 30,000. We might actually get below the support. So I want to point that out because I think if you're a buyer of Bitcoin and you think, nah, there's no way it's not going to break down, buy it right now. This is the best risk reward you're going to get. Wouldn't you agree?
Yeah.
I mean,
pretty close to it.
Yeah. I mean, how much better of a risk reward can you get for longs right now?
It kind of reminds me of gold. Gold had to hold 1850, 1845. And if you were buying it there were a few tests. And then once it took it out, and, I was talking to some of my mentees about it Saturday, Blake, is that, it's a very difficult thing to do. But like you're saying right here, it's good or bad from here. Is that you could be long with and reverse if it doesn't hold. It's a very difficult thing to do. I know you've taken a loss on one position to reverse out, but I mean, that would have worked like a charm with gold. Say you got long with stops under 1840, you had your losses back in a heartbeat.
Yeah. And you know what? The thing is, it's more difficult though to flip around and go short Bitcoin. You have to have, you have to have a margin account or trade futures or, and there's only a couple brokers that offer, shorting of Bitcoin. So you gotta think about that, or if you're in Europe, there's a lot of European brokers that offer these Bitcoin CFDs, which is cool because this way you can actually flip around short. But I'm just saying that on Bitcoin, yeah, I hear what you're saying, Dale. If you're wrong, you can just flip around and go short. I just know a lot of traders, especially here in the U.S., don't have the ability to actually do.
I wouldn't do it in Bitcoin.
What's that?
I wouldn't do it in Bitcoin, but I mean some of the legacy markets, that don't have the same type of monetary moves, the type of reflexive moves that Bitcoin has.
Yeah. It's
I mean, we knew gold. I mean, you even said it. You were going to get long the dollar if you saw gold take out that level.
Yeah, the 1845 200-day moving average, correct?
Right. So
yeah, and anyway. I mean, look, I don't know about these precious metals. They are really heavy. I know we respected, like in silver, we respected the 618 retracement, which, we talked about pretty heavily here. And notice how we just hit. This is interesting. I wonder if that spike low, it is real. So we hit a brand new fresh low overnight, and then obviously divergent relative strength, and then we bounced right at the 618. That's interesting. That was like unfinished business here. We hit it and then bounced. I still look at the gold market and the silver market, and they still look like they want to trade lower. And I look at Bitcoin, it looks like it wants to trade lower. So I think one of the things that we need to pay really close attention to at this point in time is see how the rest of these commodities are acting. Right now, copper's holding up, after having a little bit of a pullback. Let me see here's my copper chart. Copper is pulled back a little bit, but we're holding up relatively well. I mean, you can see the chart here. Well above the 200-day moving average. You got crude oil that's holding, above $71. It's having a hard time breaking back below 70. So some of these commodities are holding up pretty well. But if those start to roll over, I think the risk is that you'll see some of the other commodities and quite possibly Bitcoin roll over as well. So I'd like to bring in, Stelios and Steve and see if they're here this morning. Good morning, guys.
Good morning.
Good
Hello.
morning.
Hey guys, how's it
Good
going?
morning to you.
All good. All good.
Happy Father's Day to you guys, and happy Father's Day to all the fathers out there. I hope you guys all had a great day. For those of you that do celebrate it, because I actually take my one day of the year and I run with it pretty well. So but hopefully you guys had a good Father's Day. Do you guys celebrate Father's Day in Greece?
We do,
Prac-
but it's Mother's
Practically or theoretically?
Practically.
No.
Yeah.
No, but what were you saying, Stel?
I said we do, but it's Mother's Day every day anyway, so it's like a blip. In the,
But
in
you guys do
the-
celebrate Father's Day.
Some people.
Some people do. So you're bringing in a little bit of that Western.
Some people I just don't know when.
Yeah.
All right. Well, hopefully you guys had a good Father's Day. So let's talk about the markets here.
Yes.
What do you feel about I know we were just talking about Bitcoin and by the way, my 14-year-old son informed me over the weekend when Ethereum was at 2,200, and I said, "Hey son, we're going to be breaking through these lows here at 2,000 and possibly 1,800." He said, "Dad, it's not going to happen." He told me that this weekend. Just so you guys know, we are.
So probably this is just a glitch in the matrix, right?
This is not real. So here we are testing the 200-day moving average in Ethereum. Bitcoin's approaching that really key.
Like father, like son, bro.
Yeah. No, but here's the difference.
Conviction.
Yes, maybe he has a little bit of conviction. A little bit more pig-headed than I was when in my younger years. I actually
It's in the DNA, bro.
Yeah, it's more of the teenage thing, sure.
DNA.
But Steve Stelios, how do you guys feel about the price action here? Equities had a nice little sell-off last week. We are, breaking through support. We're obviously getting our Monday morning bounce as we always do. But we're also, struggling a little bit on this bounce at current levels. How do you guys feel about stocks here?
My view, I agree with what you said in terms of analysis. My view, though, is that I am going to stick with what I said the week before and the week before that. I'm looking at yields. As long as yields are not picking up, I find it hard to see how this move can have any proper legs. Obviously, we can go lower, but for a proper move, I don't know, 20, 25, 30% correction, which the market, sorely needs, we have to have yields higher. End of story. That's my view. And we saw Friday's move on yields, which was I just didn't get it. I don't get it. How can 30-year yields be at their lows since February or some of that, or I can't remember, but many months. So unless we see yields go higher, unfortunately, I don't think this sell-off can stick. That's my view.
So, Steve, what say you?
Which of the two? Because the question started with cryptocurrencies and then we switched to stocks.
Hey, you know what? You've got 6 minutes to make your case on both.
First of all, I did write with conviction in my weekend analysis that it's a matter of time before we break down in these cryptos, in these consolidations, that they're bearish consolidations. And I gave the levels below which I remain bearish. I do think we're breaking lower. Now, if it doesn't happen to be today, which, to be honest, seeing how we start the week, it looks like this is probably the week we are breaking lower. But even if it's not now, it's probably later. I said since the very beginning when we stalled after the initial sell-off that, in my opinion, the market is not going to be soft with all the people that jumped late into this trade. And I do believe that the market will need to take out the recent lows before it can actually move higher, especially now that we saw companies like MicroStrategy, etc., leveraging up again. I think there is a lot of pain coming for all those actors. And probably, in my opinion, probably the best kind of signal to buy this dip will be when we start seeing fireworks, like, for example, MicroStrategy going out of business or something like that. I think then the market is going to be more than free to continue like a longer term kind of uptrend, if that's what it wants to do.
Got it. So how do you feel about that? That's your view on cryptos. How do you feel about equities?
As long as we're not reversing this move in the dollar, I think that inevitably equities will have to have some follow through to the downside. Now, admittedly, I've said it before, I do believe that this move in the dollar is counter trend. And that's the same. And for the same reason, I believe that the move lower in equities is probably going to end up being counter trend, meaning I would be looking lower, but I wouldn't be aggressive with targets.
Got it. All right. Well, thanks, Steve, for your outlook. Now, Stelios, do you have any views on how do you feel about cryptos and yeah, I mean, are you still constructive precious metals? I mean, we saw a pretty big sell-off in gold and silver last week. We had, silver reach the 618 retracement, also the 200-day moving average here.
Yep.
Gold obviously trading a little bit heavier through the 200-day moving average, but also respecting the 618 retracement. How do you feel about precious metals?
I'm still bullish in the medium term. I mean, that goes without saying. But like we have been saying over the past sessions, that they could very easily correct lower, and this is what we're seeing. As always, gold and especially silver has overreacted. It always does, right? I mean, we went down, what was it, 7% in 3 days. And I'm going to use this to get long, get long a little bit more. But
what are 22?
Well, 22 to 24. If I see a 24
Okay.
handle, I'm going to start buying again.
Okay.
So we're not a million miles away.
No.
Cryptos, I think, because we're talking about them, it's not looking good. I posted on the chat room this bear flag that we have on Bitcoin. We're very close, and I think that one of the main things to watch is what Steve mentioned. So Michael Saylor's MicroStrategy, they bought $500 million more. They raised debt about a week ago or whenever it was, and they bought at an average.
It's not the first time, Stelio, by the way.
No, it's not.
It's not. They buy raising debt.
And they bought at 37,000 or 36,500 average, something like that. And their average now in total is at around 26,000. He himself tweeted it. So for me, that's the main level that I'm looking at. That's the maximum pain, basically.
You ever hear the song written about him?
Which one?
I'm Michael the Sailor Man. I buy all the crypto I can. Huh?
Nice.
Huh?
Nice.
But by the way,
Yeah.
Simon mentioning wind. Yeah, wind is actually coming from me. I'm at a swimming pool. At a friend's house.
So let me ask you this. That's where you say, well, their cost average is at 26,000 for MicroStrategy. But really, is that where their pain threshold is, or is their pain threshold?
That's where it starts.
20,000.
That's where it starts, Blake. But there's so
Okay.
much leverage. There's so much leverage that I believe it won't need for Bitcoin to move a lot lower than 26,000 for people that own their debt, so on and so forth, to start panicking. And you understand what's going to happen. I mean, once this begins a circle of evil, imagine Bitcoin trading at 23,000. I'm not talking about exaggerated targets, right? Imagine now how the debt holders are going to start feeling. Now, imagine what's going to happen, because MicroStrategy is a very big thing for Bitcoin, right? So imagine how this can affect Bitcoin and make it a circle of evil. Now, imagine if people start dumping that debt at much lower prices in the market, that this can immediately feed back into Bitcoin. Why? Because a lot of Bitcoin owners are going to start worrying that
It's going to
They
be
might-
a whale
Yes,
selling, basically.
yes,
Yeah.
they might have to start getting rid of Bitcoin, right?
Yeah.
So this then is going to start reinforcing itself.
Yeah.
Look how happy Steve is.
What's that?
Steve is very happy telling that story.
Hey, Dale, I know it's time for your guest, and I know guest, I want to pass it back over to you. Steve Stelios, thank you for your thoughts and ideas. Before I let Dale take over, just got to mention, if you guys haven't visited our webinar sponsors, Pepperstone Securities, you want to learn how to be part of the Forex Analytics family for free for a few months. Open a Pepperstone account if you're outside the US or Canada, and then you can get Forex Analytics for free for a few months. You can be part of, like, you can see our, this is our chat room where we're chatting, all day, pretty much throughout the course of the week. And then, and if you're in the US or Canada, visit Forest Park FX. You can get cashback rebates on your trading. That you can connect with them on chat, on Skype, or email right from our website. So make sure you visit our sponsors. They're the ones that make sure that we can continue to offer this webinar for free for you guys. All right, Dale, I'm going to let you take over. Happy Monday. Happy Father's Day to all you fathers out there. Hope you guys had a great Sunday.
Good hunting today, Blake.
Thanks, guys. I'll see you the rest of you 45 minutes
Enjoy
on
the
the
interviews.
Morning Edge.
Okay. Thank you, Steve. Thank you, Stel. Carly Garner, welcome to FACE. Very nice to meet you.
Hi, Dale. Thanks for having me.
Oh, it's really a pleasure to have you, Carly.
Well, thank you.
I went to your website, and you're an author. And if you want to share your screen here in Zoom, it's that green button there.
Gotcha.
In case you want to show some charts.
Let's get it going.
Okay.
Okay.
All right. So before we get to the markets, Carly, how about the genesis? How the early part of your career, before you got involved in the markets, what led you into this arena? Can you tell us a little bit about your history?
Sure. Yeah. So, I mean, and honestly, it's not that exciting. I literally just stumbled into commodities and happened to enjoy it and happened to find a way to make it work. So that was that. I started out, like, how the college process is. When you're 18, you choose a career path, but you have no idea what you want to do at 18. So I changed my major several times. I got 2 degrees, one in accounting, one in finance. Thought I wanted to be a stockbroker. I hated it when I did an internship, and then literally just walked into some random commodity office in Vegas, which is actually very rare. Vegas has zero futures trading operations, or I mean, like, literally it was just a fluke, and walked in, started getting involved, and liked it. So
interesting. What was the name, if you don't mind sharing?
sure. So it was Aileron. I don't know if you've heard of Aileron.
Okay, I do remember them. I had an IB. Had an IB through them. Sure.
Yeah. All right.
Okay.
So, yeah.
We're from, same era. So gosh, you and I have seen a
Yeah.
lot of things change, haven't we?
Oh my goodness. Wow. It's been night and day. Yeah. But it's been mostly awesome changes. When I first started, I had like neck cramps from holding phones on my shoulder.
Oh, yeah.
Now technology has made life so much easier.
Yeah. Yeah. I was fortunate enough to, cut my teeth at the CME, the old one over Union Station a long time ago. So,
I remember.
so, a lot of people don't have that ability right now, go to a trading floor and rub elbows and talk about markets with with members and day traders. So they need people like you, and they have to be very discerning, because there's a lot of crap out there on the internet.
Oh my goodness.
Right?
There's so much. Yeah.
All right. So, and I understand from looking at what you do, you're a believer in using options more than futures in commodities.
I'm a firm believer that trading commodities is really it's a mind game. It's an emotional game, just like playing sports or anything like that.
Right.
And
it's
the
all in
idea
our
is,
heads.
A 100% it's in our heads. I see constantly, I see people literally subscribe to the exact same signal service, and one person make money and one person lose. And it's
Yeah.
just, it's because of their mental ability to handle the good times and the bad. So for that reason, like my personality or my preference is a little slower, slower game. And so
Yeah.
options tends to fit my mindset a little better. That doesn't mean it's for everybody. I mean, everyone has to find what makes them most comfortable, because if you're most comfortable, that's when you're going to be making the best decisions.
I have found one of the things I like about options is I could be wrong for a day or two. And
Right.
if I'm still right, I'm there instead of my stop being elected, take the loss, and then have to have the very good psychology, which most people don't have, that if you're right the market, wrong the trade, to get
Mhm.
back into that trade again.
Right. Yeah, it's
So
getting
yeah,
stopped out prematurely is a tough game, and it's hard to recover from. We try to encourage our clients. I mean, again, it's what there's no right or wrong way, whatever way works for any individual person, but we tend to encourage them, if they're trading futures, um, trade like hedge with options. Maybe, for example, if you're long futures contracts, maybe sell calls above, use some of that
okay,
premium to buy a put, that sort of thing. So we kind of encourage that type of
yeah.
strategy. But I mean, there's not,
So
like, again.
okay, so why don't we move to oil? It's
Okay.
one of the last holdouts. They finally got to some of the stock indexes, the S&Ps
Mhm.
last week, and the
Right.
dollar rallied, which pressured everything. The
Sure.
metals got hit hard,
Mhm.
and the crude oil market was very resilient
It
and
was.
held up during that time. So, do you make directional bets and options? And if you do, is it mainly with verticals so that you reduce the cost, or just outright put and call buying? What would
Um,
you do with crude right now, which I think is, maybe a few dollars, maybe there's one or two more highs left, but we're
mhm,
approaching what was long term, that I didn't believe, long
mhm.
term bulls 6 months ago, we're talking 75 or so. So,
Yeah.
how are you approaching oil now?
So, oil is a tough market, because it literally, like, it, as we can see now, it picks a trend and it just goes with it regardless of, it seems like nothing can knock it down. And then one day you wake up and it's
Yeah.
different, and it's different
After you
dramatically
turn
for,
your head and you're
yeah,
flat, after you've
right,
given up trying to
right.
top pick it, that's when it
It,
happens. Yeah.
that's exactly right. I mean, I'm looking at today's $70 to $75 oil as probably the probably the upper end of the range. In fact, not probably, it is. This is, oil's kind of really, since fracking came along, we've really had a hard time getting above the 70s. We really haven't seen that at all since we've been in the fracking world. Um, and we're starting to get calls for, actually, I was just reading an article this morning, some of the bigger banks looking for $100 oil, 120.
Okay.
I'm old
Yeah.
enough to remember when oil was at 150 and literally everyone on the planet thought it was going to 200, and it
Mhm.
didn't go to 200, it went to 35. So I feel like the bus is just way too full. If you look, I look at COT reports to
Yeah.
see where traders are positioned. We're not at record long positions in what, for speculators, but we're getting up there. I think we're to the point where we're getting close to where all the buyers are already in, everybody's already bullish, and so it's going to be hard for prices to go much higher. I think I can't.
Any close to
Mhm.
record short positions by commercials?
I think we're in the vicinity. I don't think we're at a record. I didn't off the top of my head. I'm not
But it's
100%.
very
They go,
unbalanced. Y-
yeah.
Yeah.
It's very unbalanced, yeah, and it's,
Okay.
people start to get complacent also, because I mean, we've really had very little back and fill action. We had one decent correction about a month ago or so, and then it just came right back. So everybody's long, everyone's complacent, and that's kind of a recipe for disaster. So I think, while I can't rule out maybe a spike up, maybe even as high as 75, 76, I think eventually we're going to roll over pretty hard in oil is my best guess, but we'll see how it goes.
So, are you implementing any option strategies? Does it involve
Um,
selling? Are option
yeah.
premiums reasonable enough to just buy puts without selling some puts, doing, some type
Sure.
of debit spread?
So, I mean, it's tricky because we're a brokerage and we have clients that are trading $2,000, and then we have clients that are trading millions. So it's not like a one size fits all type of idea. But what we're kind of trying to encourage is, I'm not opposed to selling calls up above, and then
Okay.
maybe if necessary hedge later. Now that's not for everybody. That's for somebody that has bigger account and risk tolerance and that sort of thing. But the calls are a little overpriced. So um, with strikes, up in the mid to high 70s, you don't want to get too crazy with it. But on the put side, we actually have, like, for some of our smaller accounts, we have butterflies in place. So
Can
range
you
trades.
explain,
Yeah,
butterflies, that where you're
absolutely.
selling calls and puts?
What it is you're basically buying two puts and selling two puts to pay for it, and it creates a range
Okay.
trade. So, for example, I should have looked at premiums this morning, but I didn't. But I'll just kind of do a hypothetical. So, for
Okay.
example, you might be able to buy like um, a 65 put and then sell 260 two puts somewhere in there to pay for that. Basically, the idea is you want to be long a put, but the 65 put's going to be really expensive. So if you buy the 65, you sell two 62s to pay for it, and then you'd buy a 59 to limit your risk, so that if the market just completely crashes, you have limited risk to what you pay for. Usually, you can get a $3 spread like that in oil off for about 500 or 600, meaning the most you can lose is $500-600. You could make the $3 spread minus what you pay for, so roughly
6 to
2,500.
1.
Yeah. So now it's easy to get excited to that because the risk reward is off the charts awesome, but you have to
Yeah.
be careful with butterflies. They're definitely not perfect, because if you can be too right, if the market completely falls out of bed, you were right on the direction and you still lost money on the trade.
That is
Also,
aggravating.
it is. That's frustrating. Also, you can't, like, you're almost trapped in the trade until expiration if you want to, if you're hoping to get a good profit potential on it, because of the way the options are priced. And, like, if the oil sells off, volatility is going to go up, so your two short options are going to kind of
Yeah.
be eating up a lot of the profit on long. So it's not perfect, but there's really not many other ways a small trader can get into crude oil with a risk of 500 and not worry about getting stopped out or any of that. You just put it on and let it go.
Okay. Very interesting. Any other markets that you're paying attention to last week, and your reaction to the Fed speak last week? What was
Mhm.
interesting to me, Carly, is the Fed really didn't do anything, right?
No,
You know,
no, they didn't do it.
right, kind of
No.
like, back in the COVID crash, they talked about supporting corporates, corporate bonds, and they really never
Mhm.
even bought a bond
Yeah.
until later, and they came back. So
Right.
with gold shedding and silver shedding the way it did,
Mhm.
makes me think how fragile markets are, that just a jawboning, or how wrong-footed people were, that just a
Yeah.
jawbone could have created that type of magnitude decline.
Right.
What do you think about this? I've been saying that now the Fed is going to have to do something. They can't reverse course, and
Mhm.
until the sooner they do something, the better. Otherwise, it's going to hang like a cloud over the markets, kind of like
Right.
stocks. They're going up,
Mhm.
and then they have a great earnings report, and
Right.
that's it. And the Fed, I think, it's going to be, sell the rumors that they're going to do something, but
Sure.
markets could be under pressure until they actually do something. What do you think?
Yeah, no, I think you definitely have a valid point. And I think we've seen this before, like during the last financial crisis, where people kind of lose faith in the Fed because of all the smoke and mirrors. So we could be in a situation where that happens. If that happens, we're probably going to see it's probably going to be supportive for treasuries, which I know a lot of people are surprised.
Yeah.
That treasuries have moved higher. Honestly, we've been calling for higher treasuries for quite a while. We were early, and so that happens, and we took a lot of flack for it. But ultimately, I don't think the treasury market is done going up. And the reason being, there are a couple of reasons. Sometimes in treasuries, fundamentals literally doesn't matter. Like, what makes sense to most people has no bearing on what treasuries might do on any given day. We were in a situation where everybody was kind of the opposite of what we just talked about in crude oil. Like in crude
Yeah.
oil, everyone's complacently bullish. In treasuries, everyone was complacently bearish. Any
Right.
news station you turned on or article you read, it all said the same thing. 10-year notes going to 2%, and nobody literally even entertained the idea that maybe something different could happen. Actually, I was on Bloomberg I think it was about 2 weeks ago, and I made the statement that the 10-year note will see 1% before it sees 2%. And I got a lot of hate tweets and a lot of angry people, but as it looks like maybe that might actually turn out that way.
And that's still going to be a higher low, Carly, from
Yeah,
their
I know.
0.4, 0.5,
Sure.
and that would probably be a great shorting opportunity. I could see that
Yeah.
110.
Yeah, I think you're probably
Especially
right.
after the market gave back all the yield that it had gained during the statement. 24
Right.
hours later, it's like the Fed didn't say
Yeah.
anything, right?
Right. Yeah, it's been it's just been a wild ride the last couple of weeks, and not necessarily a good ride either, but it's been wild. So yeah, I think you're right. I think that around the 1% area is probably about the lowest we might see, but we'll have to see how that goes. But again, the bottom line was everybody was short. Nobody
Right.
thought the opposite could happen, and just kind of caught people off guard.
Okay.
So
So you're looking for a challenge at the highs up there. Is that why the
yeah.
circle's up there?
Well, that's a possibility. Now that it's going to take something pretty crazy for that to happen.
Like a
maybe-
massive risk off, bear move
Right.
in equities?
Something surprising. Yes, something kind of shock to the system. I wouldn't be, I think there's probably 10, 15% we see that. So I'm not saying that it's like
Yeah.
minuscule. I think it could happen. But in the meantime, I'm thinking about, we'll see what it does with 134 in the 10-year note. This
Okay.
is the futures, by the way.
Right.
If it breaks above 134, I think we're probably looking at 135, 136, and then we'll
Okay.
see how that goes.
Are those Boley bands you're using there?
They are, yeah, just simple Bollinger Bands.
Okay. And then with the moving average, when bands pinch together,
Mhm.
and it looks like that's what's going to happen here, they begin to compress. Have you noticed
Right.
that the first move out of compressed Boley bands, the first breakout is usually a fake out?
Yeah, I would say the majority. Yeah, I would say sometimes each market has slightly different characteristics, but a lot of times it'll give you fake outs 2 or 3 times before it
Yeah.
actually does anything. So you want to be
Yeah.
careful. I mean, some people get. I think Bollinger Bands are a great tool, but you want to, like you mentioned, if they get compressed, like if we see up in this general area up here,
Yeah.
you want to be really careful. Some people just get lazy and think that it's automatically a buy or a sell at the band, but that's when it's that tight, it could break out
Yeah.
huge in either direction, like we saw here. So you don't want to,
Yeah. Compressed
yeah.
volatility.
Yeah, right. Just be careful.
Okay.
And we use them a lot to just kind of get an idea on what options might, like for example, here you probably want to be a net option buyer. I mean, that would be the general goal. When things are wild like this, a net option seller, we were helping clients do a lot of covered calls where they'd basically go long futures and then sell calls against it because the calls were pretty expensive. Even though the market was in a downtrend, the options were overpriced because of volatility. So that's been something that'll work when the bands are wide and volatility are high, assuming you're not completely wrong. But if you
Are
have,
you doing it?
you know,
This, you and I have some history. So remember when the chant on the CBOT floor was beans in the teens? And, it was like, that would be a phenomenal thing. Now they trade there forever.
yeah,
I'm wondering what, that would have been, that was a great run in
it was,
grains. I mean, one
yeah,
of the biggest runs I've seen in my career. And
yeah.
now we've had this pullback. Are you viewing this pullback as a buying opportunity in grains? Maybe, $12 beans, $10
Mhm.
beans would be good long-term positions.
Um,
And what do you think?
sure. So you can see, let me put this,
Okay, that's great. All the circles you show the temporary
yeah.
weather markets. Was this a weather market?
This particular bean rally was literally kind of a combination of everything. So we were coming out of the US-China trade war, which had
Right.
kind of held beans down for a while.
Right.
we have all this government stimulus, and we had a lot of fresh money coming into grains, which is this. It sounds crazy, but this is literally what was happening. So people would read the Wall Street Journal or watch CNBC or Bloomberg, and they hear about inflation, and
Oh,
what's the advice people say
that's what
if there's
Hillary
inflation?
Clinton did. I remember when we
Yeah,
were talking about the 100K she made in
yeah,
cattle.
yeah.
And she said, they asked her how she was able to do it, and she said she read a Wall Street Journal article.
Hey, it probably worked for people here, because literally everyone wanted to be in commodities. They didn't
Yeah.
care what they were buying. They didn't care about price. They just needed money in commodities because that's what they thought was going to hedge inflation. And at least in the short run, it probably worked.
Yeah, home
I
run
mean,
ball.
I talked to a lot of people that had allocated money to corn, and plus there's ETFs now that kind of
Yeah.
exaggerate this. So like there's a corn ETF where, people that have no idea that they're trading the animal feed corn, they think they're buying like the corn they buy in the grocery store, but they put
Yeah.
money in, and then that fund has to put money in the futures, and then it literally just
Right.
kind of self-fulfilling prophecy we start to see. And then we also, in addition to all those things, we also had weather concerns, and so it's literally just been the perfect storm. I'm in the short run, I think that the grains probably have one more run in them, because there's just a lot of uncertainties out there, weather, changes all the time, that sort of thing. So I do think that we have another run in them, but this is obviously you can see this is a chart that goes back about 20 years. Grains can have very magnificent and stunning rallies, but they just don't hold. They haven't yet. Maybe this time will be
Yeah.
different, but I doubt it. They generally don't. Especially if we see the dollar continue higher, which I ultimately think will be the case. I think it's going to be really hard for the grains to hold these highs.
Okay, bear market rally in the dollar, maybe the Dixie to 95, or, there are a lot of people that have been extreme dollar bulls for a long time that think that, the dollar could trade, 107, 110, 120, and
Mhm.
that would be a catalyst for another deflationary move in
Right.
everything. I mean, the dollar affects everything, doesn't it? It's this
It does.
fulcrum of the wheel.
It does. And, it doesn't get enough credit for that. A lot of people always want to make up stories and
Yeah.
crude oil or what. I mean, if you literally pull up a chart of crude oil and the dollar, you can see it's just like the negative correlation is insane. So all these stories we make up to say that crude oil is going higher or lower because of this, sometimes can just simply be explained by the dollar is up or the dollar's down. So it's interesting. But I'm not sure. I'm not like we've been bullish the dollar for quite a while, the last several months. And I think that this is probably just the beginning. I'm not looking for 120, but I think that I think we have a pretty good chance of returning up to maybe not 105, but 100. So I'm thinking
Okay.
somewhere in this ballpark is where
If
we're
we
going.
broke out over 100, then we could have really a huge squeeze on dollar bears. Because the whole world's bearish a dollar because what the Fed has been doing and fiscal, what's happening fiscally. There's not, I've asked people, give me a bullish argument for the dollar besides technically. Can you do that? Give me a bullish argument for the dollar.
So one reason that we have been favoring the dollar is, well, first of all, I tend to, if everybody thinks one thing, I tend to think the opposite. Sometimes that works for me. Sometimes it really works against me, but that's just how my brain works. So like you just mentioned, everyone and their dog has been bearish the dollar. And that to me is a sign that everyone that's bearish has probably already acted, that sort of thing. But the one fundamental driver that have been looking at is, like to us, we look at the 10-year note and we think that, well, it's the yields are lower now, but when yields were 1.6, 1.7 in the 10-year note, to us, we think that's low. But if you look at everywhere overseas, that's actually extremely high. And so we've been looking for money to flow from, investors overseas that are getting negative yields or basically breaking even on 10-year bonds. Put their money in the US and make a couple percent. That's not a ton of money, but if you're looking for safety, that's a big interest rate differential that I thought would help the dollar.
Okay, and that's probably also supportive of dollar denominated assets. Do you think, I know your stance in bonds, do you have any kind of stance in S&P after last week?
So I've been bearish the S&P for several weeks, maybe even a couple of months now, and on it, obviously that just hasn't been.
I have been for
just
about 10 years.
yeah. I mean, it just hasn't worked
Okay.
out yet. But
All
this
right.
is the monthly chart that I keep going back to, and I keep thinking, what in the heck is going on? I mean, this is really completely crazy. So, like back in March when we were just
Yeah.
selling everything and throwing the baby out with bathwater, obviously, that was irrational fear. And then we were thinking somewhere around 3,800 was probably irrational exuberance, and then it just kept going.
Yeah.
At the very minimum, I think we should see a test of like this area to kind of test this trend line 30, so that we're talking like 3850-ish, 3,800, I think would
Okay.
be a healthy correction. And
Back
then
to
we'll
the
see.
megaphone line, huh?
Yeah, right. But
Okay.
I mean, definitely I gotta admit, I've been wrong. I really underestimated the rally. It just overshot what I thought was
Yeah, well,
possible.
you know, there've been, look at all the divergences you've had in
Yeah,
years. We're still not confirming.
right.
So
I know.
I think
Yeah.
this is a 1 billionth non-confirmation in the S&Ps, Carly.
Right.
Uh,
I know. I hear you.
so Carly, you know, I'm really glad that I reached out to you on Twitter. And is there any kind of option strategy you would execute in either the dollar or S&Ps up here?
Okay.
Okay, go ahead.
Yeah. So in the dollar, the options market on the dollar is pathetic. So you really can't do much with the dollar index. You're either long or you're short or you're not. The nice thing is it's an index, so it's kind of diversified in itself, and it doesn't move that quickly. The dollar futures is tame compared to most. Or
Right.
you could trade the euro instead, which is going to be kind of the same thing. So you could basically go short the euro. If you wanted to be a little more aggressive, you could go short the euro and then maybe sell a put under the market. But I would prefer, honestly, I think just buy a dollar index future. And then if it's a little lofty now because we've had such a big runoff, so you want to keep
Right.
it real small here.
Do you scale into positions to get your
Scale
toe
it,
in the
yeah.
water? Okay.
Correct. Yeah. So, I
Okay.
mean, you wouldn't want anything big on here because we've had such a big run. But the idea would be on pullbacks, kind of scale it. I'm a big fan of scaling just because you're never going to hit the high or the low ever. So you might as well, kind of average
And
your
even if you
price.
do, that's the exception, not the rule.
Exact.
Because
Right.
the
And you
once in a
got
while,
lucky.
you know, I know that's happened to you over the course of your career, Carly, that sometimes you hit
Sometimes you
things
get
on the
lucky.
button
Yeah.
and you have no heat, no drawdown, but you know,
Yeah.
and the foolish thing is to expect to be able to do that
Right.
half the time.
Yeah. Right.
I can't.
It never happens. Yeah, me
Yeah.
neither. It never happens. So in the S&P, one thing that the idea that we have is I mean, probably would have been better a few weeks ago to do this, but I still think it's a great idea. So you could basically go short a futures contract and then sell an at the money put. You'd bring in, like, if you sell a September put, it has like roughly 90 days.
Yeah.
You bring in like 130 points. So let's say that you sell, where are we, like 4175-ish, is that where we are? Anyway, basically you sell here and you can be over the next 3 months, as long as the market is below 4,300, you don't lose money. The only way for you to lose money is if it's above 4,300, because the premium that you collect on the short put is hedging your upside risk. If the market drops, you're giving up some profit potential. The most you can make is 130 points, but shoot, that's a lot of money for one lot like that. And honestly, even if you're not right or wrong, let's say that 3 months from now the market's exactly at 4174, you still keep the 130 points you collected, which is like, what is that? That's like $6,500.
Okay. Well, Carly, you're an options trader. You ever hear this expression? That options are like relationships, 90% of them expire worthless.
I have not heard that, but I like it.
Okay, well, I thought I'd share that. Just got
I might
a
use
jaded
that.
outlook on life that I used to have. Anyway, Carly, why don't you show people your website?
Sure.
And the
Okay.
best way to get a hold of you for people that are interested in your strategies. And I know that I could tell that, you know, especially since commodities are in vogue, Here we go. Find out what DeCarly Trading can do for you. And
Sure. So
DeCarlyTrading.com. Go ahead, tell the
it is,
people
yep.
about what you do.
Okay, so it's decarlytrading.com. We are a brokerage service. We're a boutique brokerage service. So we're not any, well, we are different than like TD Ameritrade or IB, or I'm not calling any of them out or bad mouthing them. I'm just saying we offer the same services, only they're extremely enhanced. So for example, with us, you can trade futures and options on futures online on a trading platform. We have about 30 platforms to choose from, or you can trade with us broker assisted, meaning that you can talk to someone, they can hold your hand, they can help you. We answer our phones, we answer our emails, we do this for a living. We only deal in futures and options, so we know we don't know everything. We don't know where the market's going, but as far as like logistics and getting things set up and basic questions, we can answer them right off the bat. If you've tried trading with some of the bigger shops, they'll probably put you on hold and pass you around 10 times and still can't answer your question. So
Okay.
that's what we do.
Okay. Well, thank you. It was great meeting you and hearing
Thank you.
you. And you're now my trading warrior sister.
All right, perfect.
Accept it. And really appreciate your views and your experience, Carly. I'm glad I reached out to you, and
Thank you.
I think that we should do this again down the road. How about you?
Yeah, absolutely. It was fun. Thanks for having me.
All right. So everyone, that's a wrap. You know where to find Carly at DeCarly Trading, and that's also your Twitter handle again.
It
Carly
is. Yep.
okay. At DeCarly Trading, you could find her on
Mhm.
Twitter, and really appreciate you taking time out of your day and your giving spirit to
Thank
come here
you.
and share ideas with us.
Sure. Absolutely.
All right, everyone. So that's a wrap. So whether or not you're going to do something in bonds or something in the dollar, don't just count those. Your bearer bond certificates, count your blessings, and we'll see everyone tomorrow for Turnaround Tuesday. You could join the team for Morning Edge in 13 minutes. Adios. And thanks again, Carly. Get her book, they're saying. Okay. There's a nice recommendation for Carly's book.